Worries over Europe take center stage, the spotlight on Germany as its parliament gets set to vote Thursday on increasing the European Financial Stability Fund. Greece is still waiting for more bailout money, and the clock is ticking as the country runs out of cash in October. And U.S. futures fight to stay positive. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, let's get to it. So another big day of gains on Tuesday, but the markets closed off their high. We're looking at kind of an unconvincing rally in my mind today. What are you seeing?
I think a lot of market participants are unconvinced. That's why if you listen to the TV all day long, there's a side of the tape that says this isn't going to work in Europe. They're kicking the can down the road. We're going to have Armageddon. And then there's a side of the road that says, you know what? The tape's going higher. We've ended the quarter. They're doing the window dressing. You have a lot of mutual funds that end their year on Friday. Some things are holding up well. So it's like the tale of two worlds. So you just have to figure out like what world you're in. And the world that I'm in tells me that on the third day of an up move, I'm selling some of those longs after a 70 to 80 handle rally, because typically the top end of this range has been a place to sell, not buy.
Right, I was going to ask, because yesterday you were sort of buying the laggards when they had the rally. You were going to take some profits and then hold on for the rest to get some extra juice. So are you totally flat now then?
The laggards that I put on yesterday, I took off into resistance. We'll go over where I think they could hold for a future price movement, but you could also look at the S&P to get the same type of gauge. So if you look here at the SPX, you will see that we came up into this upper end of the range. So you had a move on 3 days. We held this 1120. So a lot of people are saying double bottom. Okay, held the bottom, rally off it. Shorts got worried. Here we had the push. Yesterday we went to 1195. Sold off end of the day. We're opening up right around here now. So for resistance, I think some traders might try and be short versus 1195. But if we break above it, we can easily see 1207. And then if we close above this 50-day moving average, which we couldn't do over here and couldn't do it in the previous times, that would be deemed bullish. So I want to see this market prove to have buying this upper end before I commit to holding things for more than 2, 3, or maybe 4 days.
So two quick questions. So is like a 1207 and 1160 the two lines in the sand that investors have to pay attention to?
That's exactly right. Because 1160 would prove that it's holding higher and we're not just going back down to the lows and doing the same thing. If you look here that we've done so many times where we've gone from the low end of the range to the upper end, back to the lower, to the really higher, and then all the way back down here. So if we could go up to this area and continue to hold above this, just say 1160, that would show some buying commitment where it didn't just fall back to the lower end of the range. And then if I see that buying commitment and I see the laggard groups hold higher and I see some leadership, perhaps I'll be adding to more of my positions. Right. And then I would actually recommend being in more than a macro tier 1 long, because I think investors for the longer term could only be in macro tier 1 long until we get further data and more clarity on what's going on moving forward.
That's lightly invested for all you out there. Okay, but then Scott, how do you make money right now? If you're not shorting, if you're not really going long, how are you making money?
What's today's date?
Today is September 28th.
September 28th, I'm on the highs of my month. My calculated trade for me is now over, so I'm coming in very flexible. If something develops, I'll trade it. If not, sometimes you have to be happy where you are in the month and move on.
All right, fair enough. Well, let's get to some of the laggards that had been holding up but sort of sold off at the end of trading yesterday and that you were particularly trading. Let's start with the financial. Started strong, lost juice. Meredith Whitney lowering estimates for Q3 in 2012 for Goldman Sachs. What direction we go here?
Well, same type of trade on Friday. This group actually bottomed before the industrials and some of the materials bottomed on Monday. Morgan Stanley we talked about Goldman off of 90. And if you look here at the XLF, it rallied right into the 12.5 resistance. I recall drawing this little wedge about a week ago where we broke to the downside. So you had a nice 3-day move right back up to that resistance. I would have been a seller yesterday here. So now if you want to stay with the banks and think something changed, that all this bad news is priced in, I would say make sure the XLFs hold this 12 range, 12.15. And if it does, chances are it might be able to break above this little downtrend here. I'm not going to draw it above 12.44. And then you get a bigger move to 13.50. And then some of the banks will follow suit. Will
Goldman really be the leader of this bank that you want to pay attention to, or is it really Bank of America?
Well, Bank of America has been the laggard. Goldman has been perceived as the leader, and obviously J.P. Morgan is the class of the group, which is what they say. I'll just show you Goldman as an example. Goldman also had a nice 3-day move. So here's your move from 90 back to about 104. That's where it sold off from. Nice 3-day trade. Question is it more than a trade? So if it continues to go sideways above, just say 99 or 98, I think there's a chance for another trade where I'll get a little frisky or back involved if it broke this downtrend, and then you could see a bigger move to maybe 115 or higher, and that means the market is back in rally mode because finally it'll have some participation from the financials, which we haven't had in so long.
All right, let's go to the OIHs here. Oil services sector turned lower, but oil prices had that 5% move, huge. It's holding around the $84 level, at least WTI is. I mean, wouldn't that be some kind of fundamental support for this group?
There's a lot of fundamental guys saying that this group was thrown out, and it was thrown out for no good reason, that there was too much fear. I targeted it also as that 80-20 cute red dog reversal trade. So now that trade to me is over.
Okay.
Now the question is, can you trail it and stay with it? So if you look here at the OAHs, we talked about this yesterday. I said there's a good chance it fills the gap. It filled the gap up to about 118 and then turned down. So for me, my trade was 108, sold it around 115, and then it sold down. So if you're staying with this trade, I would say make sure that it holds higher. Make sure it could hold, just say this 112, 113 area. And then if it does, maybe I'll get back in there above 118 for a move to this bigger resistance, which will come in around 122 to 125. And then you could overlap stocks like a Halliburton, a Schlumberger.
Right.
They're all, the same type of patterns where you had a nice, day and a half move. The question is, can they hold higher? Can we see commitment instead of just a trade?
All right, two more quick sectors, and we don't have a lot of time. Want to go on industrials. Held up, though, almost 2% higher on Tuesday. More juice here, or are we going to see it just roll over?
I think the industrials are trading just like the S&P, so pick one or the other. I don't think there's any added value in the industrials right now.
Fair enough. And then Freeport, because we were talking about copper yesterday. You were trading Freeport. What are you doing now with the stock? It gave you a lot of value.
Well, yesterday I sold it. It was a nice 2-day trade showing you could be a market timer. A lot of people started talking about it also. For me, I just wanted it for a day and a half trade. I don't really love this group. Here was your pivot low. You could have bought it. On when we spoke about it around 32, it traded above this gap here at around 33.50. Nice move to about 36. So now for this, let it hold higher. Same type of scenario. If it could go sideways here, hold higher, and then perhaps build a new little pivot, maybe get back involved or add to it for a move back to 40, but this is really not an area to get too excited with.
I have to point out that one of their mines in Peru, there was going to be a strike today, but it's moved to Thursday. So I just point that out to everybody who might be interested in trading it long or short.
Oh, some people probably got short based on that happening, so it didn't happen, so it's up, so they might get caught, and you might get, actually I might even look at it for a trade today if it holds up, because there is some room to that upper area then.
All right, and we'll be back with tech and what's moving and what's not, and other quick ways to make some cash right after this.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
All right, we're going to get in the trenches here with some tech that's been making some headlines. We want to go to Apple. Didn't really do anything yesterday when the market was up almost, but the Dow was up almost triple digits. What'd you do with the stock?
Well, I still think there's some concerns over the JP Morgan note. People are for it, against it. It was really choppy 2 days ago. We did buy some on that dip. And then yesterday, I'm like, you know what? It's up $5, up to 407, 409. I sold it there. And then it showed relative weakness yesterday when the futures were going higher. I always use Apple as a gauge. It couldn't go higher, showed relative weakness, so it was a good short. Now, if you look at the chart of Apple, I did cover yesterday. It was just a cute type of trade. I'm a trader. I'm allowed to do that. But you have a high, you have a lower high. I think you really have to be a little careful here if you're in momentum shares. You could stay in tier 1, but if it starts to get below 398 and closes below 395, I think we're going to see some composure change, and it could take it down to 385 or so.
But how drastically is Apple affected by the end of the third quarter? Because you think a lot of people are going to want to own it or also book profits because it had such a nice move.
Well, you can have the push-pull where people...
And particularly with Apple.
Exactly, because it's on the books, it's a performer, people want to show performance, so you might have people who want to mark it up, but then you might have people say, I'm going to sell it before settlement. Settlement's 3 days, so there's that pressure. So I would say just be careful, but if it does get below like 398 to 395 psychologically, it could impact the tech sector. And same with what did you talk about? Amazon, right?
Amazon, yeah. I just want to point out with Apple real quick, they have an iPhone event next week, and they really suffer from the buy the rumor, sell the news kind of thing. So just keep that in the back of your mind. But okay, Amazon down 2.5% yesterday. It has the catalyst today, though. They're supposedly unveiling the tablet, but expectations are pretty high here. So I wonder if there is a trade for that today.
Well, yesterday I saw talk that it looked a lot like the playbook from RIMM, and people didn't like it. That's why it sold off. So thank goodness I think the expectations were brought down, because if it was on the highs and it didn't meet expectations, it would have been down a lot today. So since they took some of the fluff out yesterday, it'll be interesting to watch. And this also is at a key area for me. And as a trader, you look here, here is your pivot top, and then we rallied off of this small uptrend, but we closed right on it. So hopefully it gets away from here quickly, but if it breaks and closes below 220 and breaks this uptrend, it could make a quick move down to 211. So I would have a high stop here around 220, and if it shows relative weakness, I think traders might try and short this today.
All right, let's go to VMware. I had a nice move. I was going to say nice move. It was a bad move, down almost 2% yesterday. So how would you be trading the stock?
Well, it did have a nice move into yesterday, but just like everything else, 3 days, it was sold. And these cloud stocks are acting a little iffy here.
It had a nice bounce after Oracle's quarter, actually.
Yes, it did. Yeah. And we had a trade there from like 90. This was the last time we traded, I think. It was like from here, 90 to 95, and then it came back in and then sold down pretty hard yesterday. I think that there's a clear line of resistance here in V&W. It's not going to start getting frisky until it gets above this and holds above this, and might wait for earnings for that. I would say be light. You're seeing some type of wedge develop, but at this particular point, it's a tier 1 long, or it's an avoid as a trade.
All right, let's go to MasterCard. Held up yesterday, but again, like I mentioned, it could get dragged down by financials. We also saw Discover Financial randomly down yesterday, Friday. Didn't see any good real headline for that.
I didn't see it either, and it didn't turn my head, but MasterCard is another one of the chosen ones that is riding an uptrend, riding the 50-day, and that's great unless it changes. So I'm going to keep my eyes on this. This will also help me with future market direction. You look at MA, you take a quick look at the chart, you will see it's starting to constrict, but it's constricting on this uptrend. Okay, so you have your high, you now have a lower high, so it's got to get above this area to get out of harm's way. But if it breaks and closes below this 330, you could see a move lower, and then the trend might change here, and then people will finally say, I told you the consumer wasn't spending, I told you it wasn't a toll machine.
Well, delinquencies are stemming, though. They aren't terrible, so that anyway.
I gotcha. But I'm not saying you told me, I'm just saying everyone out there. The fact of the matter is, it's been a chosen one. It'll help us with market leadership or direction. If it breaks below that uptrend, you have to stop yourself out.
Rounding out the leader segment, when I go to Green Mountain Coffee, and a relatively flat yesterday, had kind of a crazy day.
Yeah, this one's all over the place. It tried to break out like a week or so ago, came back into the base. It too, you have to have a high level stop, because if everyone's right and all the bears are right out there, it's going to be hard for even the strongest stocks to hold up. And right now, this was your breakout failure when it tried to break above and close below. Now we're holding, the 50-day moving average, but a lower high here. Use 101 to 100 as a stop, because if it breaks below this and the market gets pressured, it can get pressured with it. But stay with it. Here's your line in the sand.
Also, I wonder if it's going to suffer the same fate as Apple, because it's been such a high flyer this year, up over 250%, if that's going to be a big rebalancing stock this week.
That's the problem with this week, is there's so many cross currents, and stocks aren't trading. They're not trading on fundamentals really anymore. Now they're trading on whether it's quarter end, rebalancing, positioning for the fourth quarter. So it's, again, a good spot to lose money. So at this point, be light.
All right, let's go to some quick hits we want to get to. Research in Motion getting a lot of attention because rumors of Carl Icahn might take a stake in the company. Are you trading it?
Yesterday we traded it for a bounce. It didn't really hold up. I think if you're short, be careful. I would cover your short. You made your money already. If you're long, being small, there is some value there in that stock, and I think it can go higher if there is a play there.
And GE got a lift because of the Dreamliner. A small lift, but it was a lift nonetheless. Are you trading it?
I haven't looked at GE, I don't think, in 6 months. It's been a dead stock. There's not really activity there. I've traded twice a year. This is one of those times. I'll tell you when I'm getting involved.
Fair enough. All right, Transocean down slightly. There's been sheen sightings near the BP oil spill in the Gulf of Mexico, and that's blamed on perhaps a sinking rig pipeline from Transocean, so could weigh on the stock. Anything about the BP oil spill is going to be a negative. Would you be shorting?
Well, I would maybe stay away. There's so many. It's so hard to pick winning stocks. So if you have a cloud over that with like a pipeline and another spill, I wouldn't be in there. But if there is none, it could be a squeeze. Too many variables to figure out there.
And First Solar, that was interesting. Was on the list, slightly higher. Would you be trading this stock?
Guys played this for a bounce. I'm going to show you the stock. The chart just shows you how in weak environments, air stocks get crushed. You now had a nice 3-day move from 60 up to 75. I think if you want to be long it, use 70 as a stop, but I think ultimately this stock's going to be $40.
All right, IBM closed higher, has the dividend, going to be a really good third quarter end play. How would you trade the last couple days?
I would say stay in tier 1 macro long. It's been one of the chosen ones. I haven't traded in a while, so I have to look at the pattern here. IBM just had a big move. I would not be chasing the strength up here, but if it pulled back to about 172-ish, I think you could buy it back.
All right, let's round it out here with gold and silver. My favorite topic, of course, had a big move yesterday, and then they closed off at their highs. How would you be trading that today? Same strategy?
Well, actually, I think gold is up a little bit, silver's down a little bit.
Yeah.
The easy trade was over where it got crushed. Gold went from 1,800 or so down to 1,550, so you had that cover your short, reversal rally, up open, and now it's kind of choppy. My level in the GLDs to watch it because I'm coming in flat would be perhaps buy it or nibble versus the low of around 159.90 or 160. And if it can go sideways, I might even add if it goes above yesterday's high of 162.30 for a move back to 165. So right now, might need a little sideways work, but it could continue higher. And silver, I would just avoid. It was a great day-and-a-half trade at this point. It's just really noisy.
Wouldn't be shorting it here or anything like that?
It's
after
already,
that big move?
I tried shorting it yesterday, and then I went to a meeting and I covered, unfortunately, and I missed the trade. A lot of guys caught it because it was a nice reversal into a big open. The good book says fade it. It faded down. I might as well show the charts, and I'm talking about my good book, and it's the holiday time. So you could have faded it in front of this gap. And now I would say, if you long it, be careful here because if it goes below 30.57, it has some more room to the downside. But don't lean on it short either, considering where it just came from. I'm going to avoid it today.
All right, got to stay nimble here in the last couple of days. We're also going to have light volume. It is a Jewish holiday starting on Thursday, so everyone be prepared. I guess that's the takeaway.
Yeah, so if you celebrate the holiday, Happy New Year. Follow us on the virtual trade floor. I think a lot of us are leaving early, so if you don't hear us, don't be alarmed. We're out getting ready for the holiday, which I think you should be.
But Scott will be here tomorrow. Don't worry.
Yes, I'll be here if I want to call.
All right, have a great day trading, everybody.